Here's everything that happened in the markets this week and how that will impact your portfolio. This week, we got key inflation data, wholesale prices, and PPI. They both came in under expectations at 8% year over year, which is still extremely high, but it's starting to ease up from previous months. Now, this sounds like great news, and it partially is, but how the markets responded to this was really bad. Financial conditions significantly eased, with the 10-year treasury yield dropping significantly and the 30-year mortgage rate also dropping significantly. What looser financial conditions do is that it trickles down to actual prices. So the Federal Reserve closely monitors things like the 10-year, 30-year mortgage rates and other key financial metrics that are basically forward-looking indicators of inflation. So the market right now is essentially fighting the Fed. The Fed wants inflation to go down, and the markets are essentially propping inflation up. Part of the reason is Wall Street bonuses are coming up, so a lot of money's flooding into the markets to try to get those bonuses up. But another reason is there's this thought that the Fed is going to pivot. But the thought that the Fed is going to pivot actually causes higher inflation. So people saying that the Fed's going to pivot means that the Fed is very unlikely to pivot. Some other news is that China's economy keeps on getting worse. We got new economic data that showed slowing industrial output and slowing retail spending, both coming in under expectations. Despite this, the Biden and Xi talk sent Chinese stocks skyrocketing because now it's assumed that Chinese and US tensions are going to ease, and there's now a very low likelihood of stock delistings. Despite this, I would stay away from Chinese equities because they have massive structural issues, like their demographics, like their housing market collapse, their whole entire over-leveraged financial system, and specifically their unstable government, which is a one-party state, which has no competition, so no need to improve essentially, and they only have one person at the top of that can essentially make any decision he wants. So Chinese equities are very unstable and I would stay away from them. Stocks were generally flat this week. The US dollar was also generally flat this week. Energy decreased a bit, specifically oil, and the yield curve is becoming increasingly inverted, which is signaling that high potential of a significant US recession. Target also missed earnings and it crashed afterwards, but surprisingly, Home Depot and Lowe's both beat earnings. That's all for this week. Please subscribe if you like this channel. It would mean a lot to me, and I'll see you tomorrow.